Well, hello folks, I'm L.A. Little, and I'm bringing you a update on the uranium miners range trade. I'm doing this, looks like about an hour before the close here on the 13th. And as you can see, this market sell-off is hitting everything today, including the uranium stocks. You can see it here. Pretty ugly day. Now, if you recall, on February 1st, we were looking for some sort of a breakout to get and stay higher. And we need to see that breakout stay higher in order to tell us we were going higher, but it didn't. It broke down, and it created a range. And on February the 8th, I started to tweet about the fact that it had broken down and a range was starting to take place. Here's that tweet. Here's the parameters I gave back then. I basically said, hey, that since we've done the retest regen, it failed, we're going to go after these lows. That was back on the 8th that I said that. And here's the one for the URNM. Same thing. That was the idea. Here we are today. We'll start here with the Uranium Trust Fund, then we'll go to the miners themselves. But basically, you got a range that's developed. You know, this was the breakout. Breakout took place there with this arrow that you see. You got over it, came right back into it, tested, and eventually broke it down. That was a failed retest regenerate. What does that say? It says it's going to go after the swing point low. Now on the 8th, we were thinking this one would print, and it did print. There's your swing point low. That's the target. I don't know if it's going to get there, but that's the target, right? That's where it wants to try and get to. And you've got another one down here. Now, given the strength in these charts, I mean, this is the weekly chart. Look how strong this thing has been. I mean, you've been just chugging up higher and higher. Here's the monthly chart over here doing the same thing. So when you look at a range starting to develop on a daily time frame, well, this is just a short-term kind of event, at least so far. And you have to view it with respect to that and say, hey, this is a one-way range. This is not something I'm going to try and sell the tops and buy the bottoms. If anything, I'm just going to try to buy the bottoms and flip as it goes higher. That's the ideal of a one-way range. That could be in addition to some sort of a core holding that you keep holding, or it could be, if you're just trading, maybe that's what you're doing. You're flipping it all and buying it all back. The fact that we saw over-unders over here, right? Big volume, gets over it, comes back under it, has less volume, and closes under it. That's what's happening on the monthly as well. That suggests that, yeah, this in fact is a range, and it's probably going to be a range for a while. So unless you're just going to sit there and hold through it all, you trade around it, at least trade around some sort of a core position if you're a long-term investor. Now, if we move to those miners, and I'll start here with the URNM, it's the more pure play. Again, that swing point low we said we'd go after is right here. We're coming after it today. I don't know if it's going to break it today, but it looks like that's certainly going to happen. That sets up your range, and your range can be anywhere from about here up, or potentially even that swing point low up. I suspect it will be this lower one. I will probably try and test that. But the good thing about it is when you break a swing point low, it's going to set up a retest regen bearish. In other words, this is going to be the bearish retest regen zone. If it breaks this one, it will be here. And 1 to 2 bars after you do that, you're going to get a retest, almost always. And so I would suspect that as this comes down, it's going to come right back up and try to retest it. And what you want to look for when that happens, and draw this back in here, is you want to see, assuming it comes under here, closes under it, and then comes back up. You want to see whether it can get over it and close up here, or if it falls down and starts to regenerate lower. If it starts to regenerate lower, then you're going to get a larger range. If you get a larger range, you go over to your weekly and you look at it and say, okay, where's the potential bottoms? There's this little area here. Let's just throw that up and say that's the range. There's this area here where you have a nice anchor bar. You have this swing point high with the low there with a nice volume anchor bar. And so this little congruent area in here you would suspect would be the target. And so that gives you the big range if it gets that low. You can do the same thing on the monthly if you want, but I think it's way too premature to start looking at the monthly at this point. So that's your range, the initial range. If it turns bearish, and breaks, comes back to retest regen and regenerates lower, then you look for the larger range. URA, basically the same thing. We'll pull that one up and look at it. You've got the same sort of an ideal here, and this one has already broke the swing point low today, assuming it holds. There's another swing point low here. Where's the range on this? Well, this is getting sloppy enough that it's easier just to go over and look at your weekly one, and you note again, nice anchor bar here, same swing point high that we saw in the URN now. So you got to assume that little area right there that you see the support line, the green on the TA today Neoclassical charts, it's telling you that's where demand zone is, and I would think that would end up being your range. And so the idea is you buy the bottom end of the range and you flip towards the top end of the range. And the first flip will probably be the best one. In other words, you'll probably see, given how bullish this has been for so long, you'll probably see something in the order of you get down here, you come back, this fails to hold, you come back up into this area, maybe even a little bit higher up, and this is where you flip. And this will go on for 1, 2, maybe 3 tests, and then eventually you get another breakout to the top side. That's the general idea. Whether it plays out exactly like that or not, that's to come. You have to see what it does in the future. And if you look at any of these other charts, if you're looking at the SRUFF, it's got the same pattern. So this is basically the same ETF as the U-UN out of Toronto. But even if you go to the miners and you look at them, here's UEC, Uranium Corp. Same idea, right? You got a nice little range. Where's the target? It's this swing point low. The range would develop in here. If you look at any of these, you're going to see the same. Now, the weakest one, of course, is CCJ. This one's already broken down. This is leading the URNM and others to the lower side. Where's its range? Well, it's already towards what should be the bottom of the range. If you look at any of these, they're all going to play out the same way. So just take a look at them, see what you see. If you want to play individual miners, same concept, nothing's different. You just take and develop, see where your range is. You're buying the bottom of the range. You're flipping up towards the top. That's what should happen. The consolidation is happening. It's not going to change the bullish foundation that we see in these charts. You've got a bullish situation here. This isn't going to change, folks. This is just a consolidation within a bull uptrend. That's healthy. That's what you want to see. That's it for today. Have a great one. Stay safe. I'll see you next time.